Strategy and other treasury companies like Metaplanet are eating the entire supply of Bitcoin. And I'm talking today with Peter Duan on why he's not only bullish on Strategy, but also why he is so bullish on Metaplanet and what this changed environment in Bitcoin means for Bitcoin. Enjoy. Maybe give us some brief overview or background of who you are and especially why you're excited about Bitcoin.
I've worked in traditional finance my whole entire career, 14 years. Within finance, I had quite a wide range and depth and breadth of experiences. I started off at Cantor Fitzgerald doing commercial mortgage-backed securitization, so structured finance, had experience working in investor relations at an S&P 500 company, and most recently I was a wealth advisor. So there's a whole range of experiences, and yeah, just Bitcoin was one of those things that popped up along my radar actually back in college. But in that time, Bitcoin was less than $100 a Bitcoin, and it was used for illicit activities on the dark web, so I didn't really pay much attention. But it kept on popping up in my radar as Bitcoin would go on these tears, and then it would inevitably go into a bear market. But the resilience of Bitcoin was what caught my eye, and I finally became orange pilled about 4 years ago.
It's the orange pilling. It takes some time for me. For 3 years straight, from 2017 to 2020, I thought it's a scam. It was very hard to get over that belief once you are in a lane. Maybe let's get started with how you went from understanding Bitcoin to how you kind of discovered treasury companies. I guess it was very natural for you because you have the Tradfi and the investor relationship background.
Yeah, exactly. Bitcoin, up until Bitcoin treasury companies, was very much a retail-driven phenomenon. And it wasn't until MSTR, or now known as Strategy, really popularized the idea of Bitcoin treasury companies in which they utilize their balance sheets and the underlying volatility of the Bitcoin on the balance sheet to do financial engineering that really caught my eye. And really shout out to the original Quant Bros, and now it's evolved into MSTR True North, for really helping at least me and the community at large really understand what the impacts are of a Bitcoin treasury company.
What's actually your thesis around? I feel like I want to start with Strategy first because it's always the biggest one. It's always the if someone is involved in the treasury company space, like chances are they have Strategy or some involvement in Strategy and they're interested in it. So what's your thesis on Strategy? And then later we can kind of dive into Metaplanet and how they are kind of different from other ones.
Yeah, so first and foremost, as I said, Strategy, or MSTR as the ticker symbol, was the very first Bitcoin treasury company. They've had by far the longest head start. I think now they're slightly over 5 years. And in that time, they've now accumulated over 700,000 Bitcoin. And just today, in the last few hours, they announced over, I think, a 5-figure Bitcoin smash buy. And that's actually not something that is actually super unique for them. They've been able to acquire 5-figure Bitcoin or high 4-figure Bitcoin on an almost weekly basis because they found product market fit with a product called Stretch, or STRC. We can go into that if you want as well.
Yeah, this is actually the thing that kind of blew me apart because when I looked at Strategy, I saw it, okay, they kind of accumulate most of the Bitcoin in the bull market. And so when we saw how much they accumulated in 2022, they slowed down the buying substantially compared to what they did in 2021 and 2020, and also what they did in 2023 and 2024. But now with Stretch, they have a tool where I think most people would agree with the Bitcoin market is not booming. Like we are a bear market. We are like 40-50% down. The sentiment is very low. If you look in the comment sections, which I do every single day, it's like very bearish. Even people that were very bullish half a year ago are suddenly kind of bearish. So there's kind of right now only the OGs, the hardcore people that actually believe in Bitcoin, that actually are hardened in the OG space. They are in Bitcoin, and like the weekends are kind of like washed out. And there is like in this market, strategies somehow able to raise like what 13,000 Bitcoin I saw just last week, and they had weeks where they bought a little bit less, a little bit more. But I think I don't know what the average is, but around like 5 to 7,000 Bitcoin a week in 2026. It's it's more than incredible. It's like it's flat out impressive with such a low MNAV also.
Yeah, I think that's important to understand the evolution of MSTR because when Saylor first did the strategy, he simply just used Bitcoin as a hedge against the money printing, right? So it was in the depth of COVID. He was sitting on $500 million of cash, and he was contemplating whether he should do M&A, do stock buybacks, dividends, so on and so forth, until he remembered his friend Eric Weiss telling him about Bitcoin. And so that's when he went full in. And really that so that was kind of step one, right? Then step two, he saw that the underlining the stock was trading at a premium to its underlining Bitcoin holdings. This is what we call in the industry MNAV, or multiple to net asset value. And the uniqueness about this is that so in a corporate setting, you can issue something called at the market or ATM offerings. So that like the difference between a public company selling its own stock versus us retail companies retail shareholders selling the stock is it's much bigger scale, right? And so what he realized is that if the stock is trading at a greater than 1 MNAV, you're effectively able to sell your stock and buy Bitcoin at a accretive basis. So you can think of if you're increasing Bitcoin at the numerator at a faster rate, then you're increasing the number of outstanding shares, then that is accretive on a Bitcoin per share basis, or what they call a Bitcoin yield. So you're absolutely right. In the depth of 2022, the previous bear market, they were not able to sell stock to acquire Bitcoin accretively. And that's because their stock was trading at a discount to their net asset. Now, they obviously have learned from that, and they have, experimented with various other financial instruments, including convertible bonds, which they have since moved away from, and then various different types of different types of preferred equity. It is really Stretch that has found product market fit because this is I believe their only preferred that pays on a monthly basis, and so they're trying to effectively compete against the money market folks who are probably only yielding about, call it 4% on their money, where Stretch right now it's I forgot the last time I looked, but it's like 11 and a half, if just off the top of my head, right? Which is about 2.5 times better than a money market fund. And then on top of that, they have a very competitive tax strategy, simply because the software part of the business is not profitable. And so if you're getting dividends from the from the preferreds, you're receiving that dividend on a tax deferred basis, which on a tax effective yield is probably closer to 15 to 16%, depending on your income level and state. So sorry, that's a long kind of overview, but I believe that was an important kind of evolutionary explanation of the various strategies and financial instruments that MSTR uses.
I want to double click on one thing that I think is extremely important, and it comes up so often because I come from a, how should I say it, Bitcoin maxi background. But before I became a Bitcoiner, I was just into stocks and I loved stock picking. I was up at like 1 a.m. in Europe time to listen to the conference calls in America. I love that stuff. And now finally I can relive that with strategy, which is kind of fun. But the but for me, I come from the Bitcoiner, hardened Bitcoiner self-custody background the last, 5, now almost 6 years. And it was very hard for me to get back into this Tradfi world. And it's like, okay, I'll log into my brokerage, I buy this and that. And then, okay, there's a central entity. They can dilute my shares. And so I think dilution is one thing that a lot of Bitcoiners have kind of like a problem with. Give us an understanding why it is not dilutive, especially with the Bitcoin yield going up and how this kind of works, issuing more shares, but still being net positive for the shareholders.
Yeah, that is a very hot topic, and that is a very controversial topic as well. So, the issue that I am now observing in the Bitcoin Treasury space is that at first, these Bitcoin Treasury companies were saying that yes, we are increasing our outstanding share count when we hit the ATM, but we're only doing that when the stock price is higher than the net asset value, which allows us to increase Bitcoin yield or Bitcoin per share. However, in some instances in the bear markets, they've been ATMing both the common and the preferred to maintain what they call an amplification ratio, because you need to have a certain large base of your Bitcoin of on the balance sheet in order to keep on ATMing the preferred. So roughly that ratio is about 2 to 1 for MSTR to stretch, so they can maintain that amplification. So I want to shout out a guy on X, and his name is Bobby. He's the one who's created the CEB tracker, which is, I believe, a much more accurate version of what a true Bitcoin Treasury shareholder is actually buying. So very short, summary of what it is that it's, if you're a common shareholder, right, you are not like right now, if you look at MSTR or Metaplanet, and you look at how they calculate MNAV, they're calculating MNAV on an enterprise value. So what that means is it's the common shareholder plus the preferred plus the outstanding debt minus the cash. So said another way is if somebody can write one gigantic big check to acquire your entire capital structure, how much would your entire business, including your debt and preferred, be worth? Okay. The issue with that is that if you are a common shareholder, you do not care about the preferred or the outstanding debt. However, those preferreds and the outstanding debt do have a claim that is superior to yours at the common shareholder level. So what that means is that you need to take into consideration from a shareholder's perspective, net of those debt obligations and the preferred obligations, what are you truly getting at as the shareholder? And so I really want to shout out that tracker to show that not every single one of these transactions have been purely accretive on a Bitcoin per share basis. However, if you the dilution is pretty small, and if you zoom out on a long enough time scale, it will work out, because as, say, for instance, MSTR acquires more and more Bitcoin on their balance sheet, that eventually will allow them to issue more preferreds and other financial instruments, which in the long run will be accretive. But yeah, that's where I think the messaging needs to be a little bit more cleared out, which, as I said earlier, I come from an investor relations kind of perspective. And I think that is an area that the entire industry, the whole entire Bitcoin treasury industry, could be a little bit better on.
So is it fair to say as long as the Bitcoin yield is going up, it's good for the common shareholder because they get more Bitcoin per share?
If you were to use the CEB tracker, yeah. But if you were to use the official numbers on the websites of MSTR or Metaplanet or all of those, they're again reporting on an enterprise value, which is not, in my mind, reflective of what truly is owed to the common shareholders in case of catastrophic circumstances, and the debt and the preferreds need to be paid out first.
So the number that strategy, I'll just quickly pull it up here because you probably also have seen it today. So this is the post from Seyr. It's now just a couple of hours when this comes out, probably 1-2 weeks old, where strategy has acquired about 14,000 Bitcoin, almost 14,000 Bitcoin, and he writes here, achieved a Bitcoin yield of 5.6% year to date in 2026. Is that kind of like so is that not 100% correct? Because there's also stretch and all the other kind of preferreds calculating that. I don't know if you've seen that number or if you know that, but I'm just curious how this works.
Yeah. Again, it's been a while since I've looked at that, how they calculated Bitcoin yield. But again, if the Bitcoin yield number is tied in with the MNAV number, and the MNAV number is tied in with the enterprise value, then that is slightly overstated. And again, if you were to go on Bobby's CBE tracker, it's actually really easy to explain, how he calculates it out and how he nets out the debt obligations and the preferred obligations, right? So if you were to use his CEBE like sats per share, it's of 154,934. But I believe if you were to go to MSTR's, sats per share, it is a slightly higher number.
Let's just quickly check it.
I don't know if they show MSTR sats per share. I'm looking at it as well.
I'm not seeing it, but doesn't mean that they don't show it. I don't think they show it here though.
Yeah, but again, if we were just to look at the CB tracker here, he'll run you through how he calculated, which I believe. You see, it's the capital structure, right? It's $8.25 billion worth of debt, $10 billion worth of preferreds. There's cash buffer of 2.25, and when you net out those senior claims against that of the net asset value, that's what is all owed to the common shareholder, which makes perfect sense in my mind.
Interesting. This is, I love, by the way, that website is really cool for people that are interested in strategy, Metaplanet, any Bitcoin treasury company. I think this is really a good website. I think they have 9 treasury companies. They said like 9 companies. They have Strategy, Metaplanet, Strive, the Smarter Web, Capital B, Orange, BTC, ProCap. Oh, ProCap, I don't even know about. Nakamoto. I also don't know about H100 Group. But yeah, like they have all of the bigger ones in there.
Yeah, exactly. I think that is the most useful tool in the entire space right now, and it's probably the most the one tool that has the least amount of exposure. So anytime that I get to do a podcast, I try to shout them out because it is the most useful.
How do you use, because I also saw people using that to kind of value where different kind of Bitcoin treasury companies are and what kind of value you're getting at the current prices. How do you look at valuing Bitcoin treasury companies? And we can also dive into the website if that's helpful for that.
Yeah. So personally, I believe like there's a short term and a longer term type of way to view a Bitcoin treasury company. So right now, at least what has been echoed in the space is that, hey, if we get to increase Bitcoin per share or generate your Bitcoin yield, then we should be trading at a higher multiple than at a higher CAGR than Bitcoin alone. Now, the issue with that is that if you have a company like MSTR with 700,000 Bitcoin, it's much harder to generate a Bitcoin yield compared to these smaller companies, right? But again, it's not all roses and rainbow on the smaller company side, because you also have a lot more copycats now, right? And so that's why, like, I'm a big believer in Metaplanet, because they have the best of both worlds, where they're no longer like this tiny little company. And they also have a lot of structural benefits as a company that's based out in Japan. Japan has one of the lowest costs of capitals. It's also one of the deepest capital markets. They also have a great team. Simon is a graduate from Harvard, also worked at Goldman Sachs. Their COO, Yoshimi, is also a 20 plus year decade veteran at Goldman Sachs. Their head of investor relations, Shinpei, used to work in Morgan Stanley. And then, of course, we have the indomitable Dylan LeClaire, who, despite his young age, has been a Bitcoin OG, one of the smartest minds in the space. Sorry, that was a call from my friend. But anyways, so you have to, in my opinion, have a good combination of team, investment environment, and then also a community that really is behind your story, so that in times of bear market, they're not all just dumping your shares and then doing negative PR. But instead, in the bear market, they're haulers, and matter of fact, they will try to amplify your message whenever there's new things. So yeah, there's pros and cons to being a mega big company like MSTR, because everyone's looking at you and they're scrutinizing you. But yeah, and it's also hard to generate Bitcoin per share. But I want to provide an alternative thinking that in a world when people realize that Bitcoin is probably one of the few tradable assets that has value in a world of AI and robotics, then obviously a giant company like MSTR, who has by far the biggest stack, should trade at a significantly higher multiple than other Bitcoin treasury companies, simply because they will have the size and the financial tools to acquire the next available Bitcoin better than the other Bitcoin treasury companies. So said another way is that right now in the short period, the story is generating Bitcoin per share, but in the long period, I believe the ones with the biggest capital stacks should trade at a higher multiple than the smaller stacks.
And I think MSTR has a really interesting advantage because they have the highest Bitcoin stack. And I will pull up the Bitcoin treasury companies, the ranking in a minute. They have the advantage of being the first mover. They have the advantage of being the ones with the biggest and deepest pockets. And so they probably have the advantage of like getting even more access to Tradfi instruments. And when people look at something like Stretch or compare it to other instruments in the market, like that from Strive or that one, I don't know, has Metaplanet already started that? I think they already started that while in planning to start.
They started the process. They raised a pre-IPO for one of them, but the regulatory environment's a bit slower in Japan than the US. And so they haven't officially IPO'd that as a tradable stock yet, but they've already announced it. Here's the thing, though, right? It's you got to evaluate each company on its own merits. Sure, MSTR is by far the biggest stack. However, we're in the US, which is a higher cost of capital than, say, for instance, Japan, right? Stretch has to pay out 11.5% in a perpetual financing. That's relatively expensive financing compared to, say, Japan, where 5 or 6% is something that is extremely attractive to Japanese investors. And on top of that, how are they financing that? So, for example, MSTR is financing that through the ATMing of their commons, which is a big point of contention amongst a lot of TradFi investors. However, Metaplanet is going to pay for the preferred dividends through the Bitcoin income generation strategy, which is the cash secured put underwriting strategy, on their stack, right? And so they do not need to dilute shareholders to pay their preferred dividends. So yeah, the devil's in the details, and it's just how you slice and dice, your analysis to see on a risk-adjusted basis which one is a better investment.
If you live in Europe like I do and want to buy Bitcoin the right way, check out Relai. Relai is a Bitcoin-only platform with no distractions, no shitcoins, just a BTC. It's also the easiest way I've found to do what actually works, buying Bitcoin on a consistent basis. Relai is also self-custodial. They never have the keys to your Bitcoin. No freezing of your assets, no counterparty risk, no rug pulling whatsoever. I have been a long-term fan of Relai, not only because it's incredible, easy to use and very beginner friendly, but also because it just works. If you want to get started with Relai today, click the link down in the pinned comment or in the description. And once you have downloaded the app, type in Robin in the referral code section of the app to save 10% on fees. So set up your DCA Bitcoin plan today with the Relai app and get cheaper Bitcoin if you use code Robin. With Microseed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because Microseed is not selling the washer. Microseed is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today. And you can make with that unlimited amount of backups. Go now to microseed.io. Finally, we have BTC Prague back in 2026. And this year, I'm not only speaking on a panel, but I'm actually going to present an interesting new angle, a perspective, a Bitcoin thesis at BTC Prague this year for the first time ever. I've never done that on any other conference, so this will be a fun one. If you listen to this show on a regular basis, I would love to meet you in Prague this year. It's very high signal, no noise, and Prague is just a freaking amazing city with awesome drinks and a lot of good food. Use code Robin to get 10% off, and if you buy with Bitcoin, you get an additional 5% off your ticket price. I'll see you there in Prague. Make sure to come say hi. Really interesting. I'll just show this to people that I think maybe have not seen that. I find it really interesting to see the top treasury companies. Obviously, we know the strategy is kind of in the league of their own. But Metaplanet, I think, just recently overtook Mara Holdings. I think they sold and Metaplanet bought some, so they kind of switched places there. Another one I think almost nobody talks about, and I also haven't really researched anything. I don't know how much there is even to research currently, is 21 Capital. But they have a huge stack, but you don't really hear anything from them. Like, why is that actually?
Well, I mean, this is going back to what I was saying earlier, is that a lot of these Bitcoin treasury companies are effectively startups who are now in the public arena. And so the way they need to communicate to the marketplace needs to be upgraded significantly. So yes, Jack Mallers is a known entity, in the Bitcoin space, but unfortunately, he is not that much of a known entity in the traditional finance space. And all respect to Jack Mallers as an entrepreneur and Bitcoiner. However, just from my professional opinion, as a guy who used to work in investor relations in an S&P 500 company, he doesn't come off as a polished executive. Yes, he is graced with the opportunity to go on some of the traditional finance outlets, like I think Bloomberg or CNBC, but he usually shows up in a t-shirt, right? And he says "yo," on his stuff. So I don't know, at least from just my professional institutional lens, that doesn't scream that you are a serious company. And that seriousness, that's all fine if you are consistently executing and communicating that you've been doing things. But other than the fact that they announced this massive partnership with Tether and SoftBank to launch this big stack, they have zero news. And therefore, deservedly, they do not have much momentum as a Bitcoin treasury company.
Yeah, I was super disappointed. I have not invested in them at all, not in the start, not now. So like I've like zero ties there. But I just found it curious because I think Jack Mallers is such a great communicator, and he communicates so great when it comes to Strike and his company Strike, not not Strike, the preferred of strategy. And then I don't really hear a lot of things when it comes to his holding. Like I don't know if there must be some reason, but me in 1-2 years we might be more educated on that. Let's see what happens. But yeah, at this point it's still interesting for me because I don't even hear what they were doing, and also I don't see any. Like they're always talking about like including profitable Bitcoin companies, but then they also talk about not including Strike, and I'm like, I don't know, like, it does not make sense for me, the whole story around that company.
Yeah, I mean, I don't know what their corporate communication strategy is, but thus far, I think you and I are on the same page that it is lacking from our perspective.
One thing that I just see, and I've never seen it actually, never looked that closely, is the asset dominance. So there is also ETH and Solana and even BNB and Ripple. Okay, it's like under 0.2%. Is that a thing that you look at where they might actually do other strategies than Bitcoin? Like I obviously don't think so at all, but is that something that you see in the Bitcoin treasury company space?
No, I mean, we do know that there was altcoin copycats, right? Famously, Tom Lee has done his BMNR, Bitmine, I think, where he instead of Bitcoin, he's doing an Ethereum strategy. But no, personally, it's not something that I really follow.
I'm glad. I'm just checking if if there's something going on. I've never seen that weird on the Bitcoin treasury thing to see that. But anyways, one more thing that I see a lot of people talking about strategy, and then I want to move on to Metaplanet more deeply, is that they are so indebted and they have so much debt. And this is one thing that I really believed before December, before I looked into the strategy. And then I looked at their whole environment and the balance sheet, and looked at their earnings calls and all of this. And then I'm like, okay, they not only don't have a lot of debt, but they actually have the plan to have zero debt. I think in 2029, if I remember that correctly, from the last or second to last earnings call, where they say we don't want to have any convertible notes, any traditional debts in that sense, and want to focus on the preferred strategy, which some people call it that. It's capital, it's an obligation to pay, but it's not that in the pure sense of that. How do you look at that, and how do you kind of respond to people saying like a strategy has so much debt?
Yeah, the debt side does not bother me at all. Matter of fact, if you look on the debt side, you're absolutely right. Their last converts is either 2029 or 2030. But if you look at the average blended interest rates on those, they're like maybe like 2 or 3%. So they're actually getting really good financing terms on those. However, the reason why they moved away from those converts into preferreds, even though they have to pay a significantly higher cost of capital, is because those buyers of those converts are 90% hedge funds who are not long-term believers in Bitcoin and instead are just using it as a volatility trading mechanism, which suppresses the volatility. And so the financing in that terms is not aligned with the long-term strategy of strategy, as opposed to the preferreds, which are perpetual in nature.
By the way, what do you hold about that name? I found it kind of funny, that strategy, because you so often kind of come in this in talking about strategy and then talking about a strategy around Bitcoin, and you kind of always have to distinguish between strategy, the word, and strategy, the company.
No comment on that.
I thought so. One last thing before we move on to Metaplanet is around Stretch. I find it a fascinating product. I find it a fascinating thing for consumers. It's also something that if I tell my sister, my mom, my uncle that don't like Bitcoin, for example, and I tell them about Stretch, they're like, "Oh, where can I buy that?" Like they're like, "Oh, someone like pays 11%." I think in Europe it's even more than in America, because Europe is used to like getting 0.1% and not like 2-3%, and so 11% is like absurdly good. What do you think is the role of Stretch, not like this year, but what is the role of Stretch in like 5, 10, 15 years down the road, or even more broadly of such preferreds that are based on Bitcoin? We can also talk about the one of Metaplanet that will be launched, the one that Strive already has. I think SATA is the name. What is kind of the role of them? Is this kind of almost like a money thing on top of Bitcoin?
It is. It is effectively a way to, it's a gateway drug, if you will, to Bitcoin. So as you may or may not have known, like there's a big industry called the private credit industry, which is now slowly imploding. So some of the big names like Blue Owl, Apollo, um, those guys are effectively a shadow bank that is charging high interest rates to companies. But those companies are, a lot of them are like SaaS companies. And so in a world of AI, a lot of those loans all of a sudden become suspect. And so I believe that there will be a future in call it the next 4 to 5 years where a huge percent of the money that is currently in private credit, which is in the trillions, will flow into Bitcoin-backed bonds. And then again, the bond market is around 330 trillion. So you actually don't need that much to make a very, very big dent, in building up, a Bitcoin-backed preferred. So it's going to really shake the credit landscape from a Bitcoin perspective.
Yeah, the private credit, like I don't know why someone does that. Like you have a high risk, and like now especially now with Stretch, there's like a way better, way more liquid, way less risky kind of a product there. It's also, I think it even attacks the S&P 500 investor. Like, what does the average S&P 500 investor really want? They want stability, and they want some growth and some hiding place of inflation. You
Yeah,
get
but
the same thing.
but the issue with that is, you really have to underwrite what is behind the interest payment, which is Bitcoin, right? And as we've unfortunately know, the mass majority of people still do not believe in Bitcoin. So, just from a traditional finance perspective, if you told me that I can get a high yield bond that's generating 11.5%, my first question is, that coupon is really high. So that I equate that with risk, right? And so then if I equate that with risk, then the only way I can accept that risk if I can accept how I underwrite that risk. But if they don't believe in Bitcoin and that it's a 20 to 25% CAGR asset, which, unfortunately I can empathize with that position, simply because if you look at the current 5-year CAGR, it's well below that. So again, yes, I am a Bitcoin bull, but I also want, because of my traditional finance background, I can see both ways.
Yeah, that's fair. Does this change when they have a track record of 3, 5-7 years of paying that coupon?
Definitely. Matter of fact, I actually said this bear market, although nobody's enjoying it, is going to be the best marketing tool for Stretch and other preferreds, because it's showing that in a bear market, not only are is MSTR's commons not impacted negatively, like to the detriment. I mean, yes, the price is significantly down from all-time highs, but we're still ATMing the commons and we're ATM the prefers to buy just this week alone $1 billion of Bitcoin. So exactly as you said, as they build out this track record of paying out these very high and attractive dividend incomes, then yeah, inevitably some people are going to wake up to that.
Yeah, it's I will be interesting to see. I think I'm blown away by the success of Stretch, and honestly, it will be really interesting to see how it is in 1 year, in 2 years, and in 5 years, because then you have some proven track record. Because that's the only thing I hear when I tell people about it. Like, will they actually be able to pay that in 2, 3, 5 years also?
Yeah.
And this is like a hard answer, like a hard question to answer, because all of a sudden you have to explain Bitcoin again. And if there's a track record of 5 years, you're like, okay, yeah, they've done it 5 years, and you've seen Bitcoin went down 50%, Stretch stayed at around $100, and they paid 11%. So like obviously it works in a 50% downturn of Bitcoin, and Bitcoin keeps on becoming bigger. Bitcoin itself, I mean, that's also a big thing. How much will Bitcoin evolve in the next 5 years? How much more mainstream adoption? How much more like how should I say that? People accepting the asset as being a solid asset to invest in, not just like a speculative asset, not just a scam or like a nerdy thing or something to play with, some toy. It's like a solid asset that the long is there.
Yeah, I mean, you already see it, right, in the traditional finance space. Just recently, Morgan Stanley came out with their own ETFs where they're trying to undercut BlackRock's ETF to 14 basis points. And then also on top of that, they have a massive wealth management arm that that's managing trillions of dollars of assets. So yeah, that's just one example, right? And kudos to BlackRock and Fidelity for launching their respective ETFs a couple of years ago. And so yeah, now you have those two, BlackRock, Fidelity, and then Vanguard allows BlackRock and Fidelity ETFs on. So we're talking about the number 1, 2, and 3 largest asset managers in the world that collectively manage over $30 trillion. And you're already seeing that, right? And you're already seeing not only in the traditional finance space, but now you're seeing it in the political sphere as well. When Iran tried to negotiate with the US, they said, hey, we want to be paid $1 million or $2 million for the tow fee, but we want to be paid in Bitcoin, right? And it's like, well, yeah, why? Because that's censorship resistant freedom money. And then one area that we didn't really touch upon, but it's equally, if not more important, is that AI and robotics is going to eat more and more of the global economy. And so in that world, what does AI and robots value? Well, one, they value speed, which will be used with stable coins, but then to accrete value or for them to they value speed, they also value energy, right? And so Bitcoin is energy-backed currency. So in that world, if AI and robotics are going to take more and more of the economy, inevitably they're going to want to buy and hold some Bitcoin as well.
I love that. By the way, I also love your analogy of a gateway drug to Bitcoin when it comes to Stretch and those preferreds. Let's talk a little bit about Metaplanet, because I think a lot of the things that we love around strategy are really interesting around Metaplanet as well. And just as an introduction, I'll put this back in because it is really cool. If you see here, the first what is it? The first 17 companies are all American companies except Metaplanet. It's like one Japan company. So if you make kind of an international versus US kind of Bitcoin Treasury company rank, Metaplanet would be number one by a lot. Like the next one would be Next Technology Holding. Is that China? That's crazy. With 5,000 Bitcoin. And so like Metaplanet has a lot more Bitcoin. You have 35,000 Bitcoin more than the second best one. So Metaplanet in the international ranking is kind of the strategy of the US ranking. What is your thesis around Metaplanet that is different to, let's say, strategy?
Well, if we're just going upon the most important metric in my mind, which is generating Bitcoin yields or increasing Bitcoin per share, they are, I believe, the best the best of both worlds. Where yes, they have 40,000 Bitcoin, but their ambitions is to increase that to 210,000 by the end of 2027, and they've been very public about that target and other previous targets, and each and every time they've been able to hit their target. Matter of fact, I started investing in Metaplanet around this time, I think last year, where they only had 5,000 Bitcoin on the balance sheet. And in just 1 year's time, they've 8 times that holdings. Of course, that's not 8 times the Bitcoin per share because they had to dilute some along the way. But still, that's incredible execution, especially in the fact that we probably just experienced 5 months of a bear market in between that time. And so, as I mentioned earlier, they have the best of a lot of worlds. One is that they have deep capital markets experience. Two, they're in a very capital efficient environment that's also a deep capital markets pool. Three, they have a very loyal shareholder base, with myself included, and other very prominent Bitcoin Treasury investors. Four, I love the fact that they're not only doing financial engineering, but they're also investing in building out the Bitcoin ecosystem around Japan. Five, they are going to pay the preferreds not out of the ATM of the commons, which dilutes common shareholders, but instead they have a very profitable and growing very rapidly Bitcoin income generation vehicle. And so, yeah, these 5 factors, and I'm sure I'm missing quite a few, makes me the most bullish out of all these Bitcoin treasury companies.
That's really interesting. Yeah, and they also have this income strategy, like all of those things that you've mentioned. Really interesting. For me, Metaplanet will be the second company I'll look into. I said I will look into strategy, I think in November. I'm kind of now at a point where I really like it. I'm building my position. I'm soon at the thankfully the prices are super low, so I can actually build the position I wanted to build in the strategy. I'm thankful to get into the slow process. But Metaplanet will be now the company that I'm looking into in the next like half year, and I'm super pumped about that journey, because all the things that I'm kind of hearing without researching deeply making me super bullish on that already. And I had Phil Geiger on not that long ago, and after that interview with him, I was like, I really have to look into that sooner than later. But I want to close the loop on strategy before I really look into a second one. So I'm looking forward to my Metaplanet research. I like researching companies.
Yeah, I love that. Yeah, Phil's a good guy. Met him in Bitcoin Meta last year. And so if I were to describe Metaplanet very succinctly, it's the MSTR version of Japan, but it's also like the Swan slash like river, like where they're building out brokerages, right? And then they have like this hotel business, and then they have this conference business. So it's like, it's like it's like the Bitcoin conference, plus Swan slash river plus MSTR in a Japanese wrapper. And so it's very diversified, and yeah, they're not just financial engineering their way. They're literally saying, hey, we're here to build in the third or fourth largest economy in the world. And so, yeah, that makes me extremely bullish.
What are they doing with brokerages? Like, why are they like Swan?
Um, so they haven't announced it like publicly yet. Like they've alluded to it, where they're going to build out like the ecosystem. For example, they've just invested some money in a Japanese stablecoin issuer, right? And so that's just like one of many investments that they're making. I think it'll be very interesting if they create a Bitcoin ETF to rival that against BlackRock and Fidelity in their system. But again, I guess I'm not talking officially for them, but I'm saying I'm definitely not talking officially for them. But what I'm saying is that like that's the direction I think they're going down, which is more of the like they're helping the retail community as well.
Yeah, and I think especially if you are an investor in a company, it's your job to not think about not only what they're doing right now, but way more important, what are they doing next year, the year after, 5 years, 10 years from now. So that's really interesting. The conferences, I know that they have once a week, not once a week, once a week would be crazy. Once a year, this big conference, like this kind of shareholder meeting with this almost like a rock concert next to it. Is that what you mean with conferences, or is there like more to that? The most important thing for your Bitcoin journey is not buying Bitcoin, but it's how to keep them. And yes, you have maybe the right tools, but how do you actually go ahead and stick it all together so it's the most secure for you personally? Self-custody is a deeply personalized journey, and the Bitcoin way is helping you exactly finding that correct setup for you personally. They are also helping you with securing your own cybersecurity. And if you want to go one step above all that, you can even get a consultation for a Plan B residency. Go to thebitcoinway.com/Robin and you will get a 30-minute free consultation. I finally and officially mine Bitcoin. This is not just something to stack more Satoshis, but it's most importantly also to support the network. Individual miners are the ones that keep the Bitcoin network decentralized. And by the way, you get KYC free Bitcoin. That's why I use Simple Mining. I get an actual proper Bitcoin miner. They set it up for me. They repair it if it breaks down. And most importantly, they let me choose the pool and even connect my own full node. I'm completely sovereign and I'm completely in control, and I can sign up with Ocean, no account needed. I just give them a Bitcoin address and then there's mining going on. No KYC, nothing. So if you're ready to mine Bitcoin, go to simplemining.io, tell them you come from Robin, and let's mine Bitcoin together.
So they bought the right to, I believe, Bitcoin.jp, and then yeah, like they had that conference, and then I saw that there was quite a number of sponsors that like paid money to do sponsorships at that conference. So yeah, I'm sure it's not a main like income generation, but what I'm saying is that like they're building out this entire business around Bitcoin that's not solely just financial engineering.
Get it. One last thing I want to ask you about is the thing you mentioned before we started recording was the Bull standard that you are kind of building to make it, especially for investors that invest in all those companies, easier. From what I understand, what can people expect there?
Yeah, so thanks for mentioning that. So, in my observation of being in this space for the last year and a half, I'm always trying to figure out what are ways that I can add my unique value to this ecosystem. So, as I mentioned earlier, I used to work in investor relations at S&P 500 company, in addition to working in traditional finance my whole career. And so, if I was to summarize my specialty, is that I can summarize this pretty complex and ever evolving Bitcoin treasury landscape into a pretty sizable, or like bite-sized chunks that will help these Bitcoin treasury companies communicate their unique value proposition to the individual shareholders. Some of them do a good job, but others are can be improved in that area as well. And so not only do I break down, what I believe is the most important filings from those companies, but more importantly is from the company executive perspective, how should you communicate that to both the retail shareholder base as well as the institutional shareholder base?
I like it. It's really cool because I think, as you mentioned it, they are more like a startup yet. And I think there's a lot of people that are interested in all the different treasury companies, and and the ecosystem is very young. Like all the websites, all the investor relationships, all those things still very young. Even the strategy itself doesn't do since a very long time the video earnings calls, which is, I think, a really like must have. And they're doing it since like a year, a little bit over a year now. I don't know exactly where they started. And such a thing is like really important to get not only the institutional investors, but also the retail investors and others ones into the boat. And I think they said they have like, what was it, 40% retail in the MSTR shares? I think Fong Li recently shared some stats, which 40%, like it sounds high. Like I was impressed by how high the retail share is.
Yeah, it is. And that's why it's important to communicate succinctly and consistently to both the institutional community and the retail community. Because if you do that well and you build a loyal following, then your retail community will not only not sell your stock during the bear market, but also actively promote your activities during the bear market so that it acts almost as an unpaid, unaffiliated investor relations arm.
Yeah, I see that the strategy very successful, and I think Metaplanet also, and Metaplanet and Strive also see a lot of activity there. Thank you so much, Peter, for being on the podcast. We have two more questions. One questions every new guest that first comes on my podcast is getting, and the question is, what can we learn from you besides Bitcoin? And I might add with you Bitcoin treasury companies.
Oh, what you can learn from me? Oh, well, I'm currently located in Vietnam, and I'm just been pursuing a spiritual path, and it's been very rewarding. I just think a lot of activities in the world, whether it is geopolitics with war or unsustainable debt loads, which leads us to Bitcoin, or even more wild things like more UFO disclosures, is various ways to signal that there's something pretty important that's coming along the road. And I also forgot to mention AI and robotics, where they're going to take more and more jobs. And so my very high level hypothesis is that we've been focused too long as humans in the material world and not nearly enough in the spiritual world where there's significant impact. And so I highly advise people to try to understand themselves from a spiritual perspective and to learn what it means to be a human in the era of AI and robotics.
Oh, I love that. Really cool. That's really nice. I have one more question, which is the end routine of the podcast, where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And the previous guest asked you kind of two questions. The second questions you get in case you that's the first question is answered in a different direction. Were you a gold bug before you found Bitcoin?
I was not.
That's great, because now you get the second question that you actually wanted to ask is, why weren't you a gold bug before Bitcoin? As a lot of the qualities that we love with Bitcoin are kind of in gold before, like gold kind of has those kind of qualities.
I mean, that's a legitimate question. It's like, first of all, 99% of Bitcoiners I know got into Bitcoin because at first those numbers go up, right? It's like, hey, it's a quick way for me to make money. So admittedly, that was my first reason to get into Bitcoin. Okay. And so with that lens, gold hasn't been doing anything until the last year. Okay. So that didn't interest me. It was a dead rock for a decade plus. Okay. So if at that point, like if I only cared about fiat returns, gold wasn't doing it. But then there was quick ways to get into make money into Bitcoin. But then once you go down the rabbit hole and you realize, oh, I don't want to exchange, Bitcoin for fiat, like anymore. When that moment clicks, then you become a Bitcoin, right? But that takes hundreds of hours of first suspending your own disbelief and your own ego, and then seeing if the underlying thesis is really true.
Yeah, it's a good one because like when I heard the question, I was like, wow, that's great because I now understand gold and I actually have some gold. I had that before, but now I value the gold and I don't want to sell it now. And I learned the value of gold through Bitcoin. Before Bitcoin, I was like you, it's a dead rock. I mean, now I'm 27, but when I got into Bitcoin, I was like 21 years old. At 20, 21 years old, I was like, what the heck would I do with gold? What like that's the most boring investment ever. And so I didn't give it any really any second look. But then I learned valuing gold because I learned about Bitcoin and about the Bitcoin standard and all of this. So the qualities of money, the properties of money, and it's a really interesting kind of thing. But it's interesting because there are a lot of gold bugs, of course, also in Bitcoin. Like Larry LaPie is like I think a famous example, but there are not that many. Like most of them come from a different background.
Yeah, I completely agree. Yeah, man, but I'm glad that we both found Bitcoin. It does provide a lot of hope in a world where things are going to be disrupted a lot. And, you said you have this tradition where you have your guests ask the next guest the question, right? And so my question to your next guest is, if Bitcoin did not exist, how would you be placing the majority of your investments?
That's a good one because I have no clue what I would do. Because then obviously I would also not put anything in strategy because then it would be quite a boring company without the Bitcoin.
Exactly. Exactly. Yeah. Just if I was to answer that, like an area that I'm super interested in now is the psychedelic industry. So I believe there's going to be a huge amount of social unrest and therefore um, mental illness that's going to come from people not having an identity and also income. But if you actually look in a lot of these new age psychedelic companies, where the therapeutic benefits alone are trouncing that of traditional pharmaceutical companies, that I believe is going to be a very interesting area that I'm personally starting to investigate myself.
That's a really interesting thing. I probably would have stayed in the lane that I was already in. I've talked about it on the podcast so often. I'll cut it short for the people that listen often to the podcast. But I was a Tradfi investor. I invested in tech stocks. I think Tesla was the biggest investment I had. It was up until now. I think Bitcoin has now made more gains than Tesla, even in the bear market. But back then, it was my biggest gainer. I had also some other tech stocks, and I was actually getting into real estate. And I'm so glad I didn't. I'm so glad I didn't buy myself a headache because I think real estate is one of the most overvalued investments. If you buy yourself a home, that's fine. Do it if you need it. If you have rental properties, that's fine too. But I'd rather have some Bitcoin.
I completely agree. And maybe we'll just wrap up with this. I worked in commercial real estate on the finance side in my entire 20s, so I know that space extremely well. And so how you evaluate commercial real estate is you actually evaluate on its tenant base, right? It's like if you have a Google that's a tenant, then obviously it tells you something about the location and also the asset quality, right? But the issue with this is that AI is so disruptive that, for example, just 5 years ago, Salesforce was like a $200 billion company and a top tier investment grade tenant. Okay. But now, because software is so at risk, the stock has completely, went south. And it's really hard to really imagine a future where, Salesforce is going to do really well in the world of AI. But apply that across so many industries where AI is going to affect, and that therefore it's going to be really hard to underwrite the quality of the tenant to see if they're going to be able to pay the rent. So I completely agree with you. Real estate can be extremely overvalued, because and especially with new technologies where they can prefab buildings, and it's much cheaper to create. It's going to be an issue, I believe.
I think so too. By the way, I just looked at Salesforce. They look like a Bitcoin Treasury company at the moment. It's crazy.
Yeah,
So they have some problem.
Yeah.
But yeah, 100% I agree. I actually I have my biggest beef with real estate, but I don't wanna track the real estate argument out there. I could make a whole lot of podcasts. I don't know why there's $370 trillion in real estate. It should be like $20 trillion. I think it should not be that much. But that's a whole nother podcast. Thank you so much, Peter, for being on. Before I let you go, where can people find you, your resources, and all the things that you're doing?
Yeah, so you can contact me on Twitter at BTC Bullwriter. You see that my handle right there next to my name. And then I'm passively working on Bull Standard. I'm mostly just working on some personal stuff in the moment. But yeah, we'll see. I mean, I'm definitely going to be involved in the Bitcoin Treasury space, as I believe this is going to be a very, very important industry going forward. But in the meantime, I'm just experimenting with a few things here and there.
Awesome. Then thank you so much, Peter, for being on the podcast. And also thank you so much for everyone that is watching and listening, for joining us today. As always, I'll be back. This content is for educational and entertainment purposes only and does not constitute financial advice.